on the stock. The Apple setup, it's been more resilient than some of the other big tech players. What are you expecting?
Yeah, no, you're absolutely right. It's definitely held up much better, amid the downturn and here in recent weeks. But for us, we're kind of looking at three things, really. I mean, clearly all about the guidance, right? I mean, we know this December quarter was atrocious because of the supply constraints out there, looking at units down about 15% in the December quarter. But it's more about the March quarter, right? We're about 2 to 3% below the street there. But again, it's more about what the street says in terms of some of those pro devices, those higher price devices, whether or not momentum is holding up there, especially relative to two relatively difficult comp years over the last 2 years with the 5G cycles that we had back then. I'd say also we're looking at services, of course. We're looking at about 5% growth here, with the potential for that business to accelerate in the second half of the year as you kind of go through some of the easier comps from kind of some of the softness on the app and the gaming, ad-based and the gaming side of things. And then finally, I think it'd be interesting to kind of see what management has to say on the margin side of things, not necessarily in the current quarter, but as we look ahead over the next couple of quarters. I mean, you've got higher ASPs with the pro devices, more favorable Forex coming due, and then lower component costs. I mean, you're looking at 30 to 50% declines in certain areas like memory. So it'll be interesting to kind of see what the trajectory there is going to look like.
Is there a good consensus? Do you have a confident number on iPhone sales? Because remember, this was the quarter where we saw the supply disruptions in China because of COVID and all these rumors and reports about what's happening with production and demand in that market. Where did you settle out?
So we're looking at about 73, 74 million units. I mean, it is kind of all over the place here, because of those constraints out there. I think also when you kind of look at the broader smartphone market, you're looking at about a 15 to 20% decline here in the December quarter. So overall, it's been just abysmal for the broader smartphone space. But we do think Apple held up a little bit better.
Why do you think that? Because PC market has been so tough. Is our phones just not related? Does it not get hit by the same sort of issues on decreased spending on electronics and goods?
Yeah, as far as the Mac side of things, especially for Apple, that's going to get hit a little bit tougher because of the extremely difficult comps that they had from a year ago with the buildup on their internally designed M1 chips. I think as far as kind of smartphone units are concerned for Apple specifically, I do think kind of course, the buffer on the ASP side of things as they kind of migrated towards those higher devices. You're talking about kind of a lesser impact on the revenue side of things. We're talking about 7-8% revenue decline on our end. But on the unit side of things, listen, I think it could go any way here, but we're kind of sticking around 15% decline.
Thank you very much for the quick preview. Angelo Zino from CFRA on Apple.